car loan crisis, what you can do to avoid falling behind.
So what's behind this? Experts point to higher borrowing costs, rising car prices, and unsteady employment. Repossessions for less expensive vehicles. Consumer spending is up, the stock market is going in the right direction, but when you focus in on the road, the numbers tell a different story.
$2 billion. That's not a hypothetical number anymore. That's real money that banks are losing right now on vehicles that used to be worth a hell of a lot more. And here's what everybody's sleeping on. This isn't happening at some sketchy buy here, pay here lot in the industrial part of town. This is happening at the biggest auction houses in America. This is happening in your backyard. These are cars that were bought brand new, parked in driveways, driven by families who thought they were making the right financial decision. And now those cars are flooding the market at prices that have dealer associations in a panic and manufacturers scrambling to figure out what went wrong. But here's what nobody's talking about. This flood isn't an accident. It's a reckoning. And for the next 20 minutes, I'm going to show you exactly which cars are drowning the market, how your neighbor ended up losing thousands on vehicles they bought 3 years ago, and most importantly, what this means for anyone thinking about buying or selling a car right now. Let me start with the numbers, because the numbers tell you everything you need to know. According to the Federal Reserve's latest consumer credit survey, auto delinquencies hit 4.3% in the fourth quarter of last year. That's not a small number. That's a surge. That's the highest we've seen since 2019, before the pandemic hit everything sideways. Translation: more Americans are falling behind on car payments than at almost any point in the last 5 years. And when Americans fall behind, banks don't wait around. They repossess. Fitch Ratings looked at all of this and found something staggering. The volume of late-model vehicles hitting auction floors has increased by nearly 40% compared to the same period last year. 40% in a single year. That's not a trend line. That's a cliff. Black Book, the industry standard for vehicle valuations, has tracked the ripple effect. Wholesale prices on certain categories of vehicles have dropped anywhere from 15 to 30% in the last 18 months. 15 to 30%. That means someone who bought a truck in 2021 for $65,000 might be looking at a wholesale value around $45,000 today. That's a $20,000 loss. On a vehicle that still runs, still has the payment book, still has people waiting to buy it. But nobody wants to buy it because everybody knows what happened. And that's exactly where this story gets dark. Here's what the dealer won't tell you. The pandemic changed everything about how America borrows money for cars. Interest rates hit rock bottom. Credit standards basically disappeared. Banks, desperate to move inventory, started offering 7-year loans to people with credit scores that would have gotten them laughed out of the building in 2019. 7-year loans. That means a monthly payment spread so thin that someone with a 650 credit score could walk out of a lot with a $65,000 truck. They could afford the payment. Barely. Just barely. And that's what they did. Millions of them. But then, reality hit. Inflation came back. Interest rates started climbing. Gas prices went crazy. And suddenly the person who could afford that $520 monthly payment couldn't anymore. Or they lost their job. Or their hours got cut. Or something unexpected happened, because something unexpected always happens. And once they fell behind, once they missed a couple of payments, the repo man was on the way. The vehicle went to auction, and the bank took a massive loss trying to offload it. I want you to understand something real before we go deeper. Let me tell you about Marcus. Marcus was a floor supervisor at a commercial construction company in Phoenix. Good job, stable income. He bought a 2022 Ram 1500 in August of 2021 for $63,000. The dealer told him it was a smart investment. Trucks hold value, right? Ram is reliable, right? And the payment was only $475 a month on a 7-year note. Marcus ran the numbers. He could afford it, so he signed. Then 2023 hit. The company lost a big contract. Hours got cut. Marcus's income dropped 20%. Not gone, just cut. But on a 7-year loan with barely any equity, there's no margin for error. He struggled for 4 months, missed a payment in July, made a partial payment in August, missed again in September. By October, he got the notice. The truck was going to be repossessed. Marcus tried to sell it privately, but here's the problem. That truck he bought for $63,000 was worth about $46,000 on the wholesale market. He still owed about $58,000. There was no way out. The bank repossessed the truck, sold it at auction for $44,000. And Marcus is on the hook for $14,000 to the bank, plus the damaged credit. That's what's happening to millions of Americans right now. That's the $2 billion problem. Now, let's talk about the specific vehicles that are creating this catastrophe, because not all cars repossess at the same rate. Some models are piling up at auction houses faster than dealers can clear them out, and that's the list you need to understand. The 2022 Dodge Challenger and Charger, especially the Hellcat variants, have become repossession goldmines for lenders and absolute nightmares for dealers. These were the cars people bought during the pandemic when credit was a joke and performance dreams felt achievable. A 2022 Hellcat Charger in 2021 was pushing $75,000 to $85,000 depending on options. Fast forward to today. Auction prices are bottoming out around $52,000 to $58,000. Dodge has also gutted the Challenger and Charger lineup to shift toward electric vehicles, which means the used market is flooded with enthusiasts who now realize their 700 horsepower muscle car isn't holding value, and their insurance payments are insane. Every auction house in the country has at least 5 to 7 of these on the floor at any given time. Banks are taking $20,000 to $30,000 losses per unit. It's a massacre. The 2021 to 2023 Ram 1500 is the second domino in this structure. The Ram 1500 became the truck to buy when Ford prices got crazy and Chevrolet inventory was tight. Dealers were pushing them hard. Ram was offering incentives. And buyers, flush with pandemic unemployment checks and desperate for something tangible, loaded these things up with every option available. Moonroofs, leather, GPS systems, heated seats. The payment shock was real, but people convinced themselves they'd grow into it. Then payments reset. Interest rates reset. Inflation hit. And suddenly, that $485 monthly payment felt impossible. The 2021 models are coming off lease now too, and those vehicles are hitting the secondary market completely underwater. We're seeing 2021 Ram 1500 crew cabs that originally sold for around $60,000 to $65,000, trading for $38,000 to $42,000 at auction. The oversupply is so bad that some auction houses are running special Ram-heavy sale days just to move the inventory. Banks are desperate, taking what they can get. The 2022 to 2023 Cadillac Escalade has become synonymous with ultra-luxury repossession. This is where the pandemic wealth effect crashed hardest. People who were working remote, making good money, thought they could finally buy the car they'd always wanted. An Escalade screams success. It screams money. Except the people buying them in 2021 and 2022 were often making pandemic money, not sustainable money. When the job market tightened in 2023, when remote work started shifting back to office, when people realized the gravy train was ending, the Escalade started rolling into repos. A 2022 Escalade ESV that cost $85,000 to $95,000. New is now trading around $58,000 to $64,000 at auction. That's a $30,000 haircut. Cadillac dealers are getting crushed because there's no demand at $65,000 for a used Escalade when you can almost finance a new one. So the repos keep stacking up. The sheer volume of 2021 to 2022 Ford F-150 repossessions is almost incomprehensible. This is the best-selling truck in America. Ford was producing them as fast as the factories could move. Buyers were lining up. Dealers were taking massive markups. Ford's own finance division, Ford Credit, was issuing loans on these vehicles to anybody with a pulse and a down payment. It made sense at the time. The F-150 is the workhorse of America. Everyone needs a truck, right? Wrong. Not everyone who bought an F-150 in 2021 and 2022 actually needed one. A lot of them wanted one, wanted to feel like a contractor or a guy who does heavy work, wanted to own something that felt substantial, and they bought them on 7-year terms at rates that looked good at the time. Then supply chains normalized. New F-150 prices came down. Suddenly, the used market was facing pressure from all sides. The volume of repos is so high that auction houses literally cannot move them all fast enough. We're talking about 2021 F-150 Super Crew cabs with 40,000 to 60,000 miles, selling for $38,000 to $44,000 when they originally cost $58,000 to $68,000. Ford Credit has taken staggering losses. The market is flooded, and there's more coming. The 2022 to 2023 Chevrolet Tahoe and suburban family SUV wave represents something different. This isn't about wealthy people making bad decisions. This is about families. Parents who wanted to give their kids more space, more comfort, more safety. Tahoes and Suburbans were supposed to be the forever cars. The vehicles you'd own for a decade. The ones that held value because they were practical and durable. But Chevy production ramped up massively during the shortage. Prices climbed. Buyers overpaid thinking they were making an investment. Then the market normalized. 3-year-old Tahoes are now worth $10,000 to $15,000 less than people owe on them. Repos are accelerating. These are family vehicles coming back to the auction block. Some of them still have car seats in the back. It's a human story wrapped in a market problem. The 2023 Jeep Grand Cherokee L represents the waitlist collapse. During the shortage, Jeep had a waitlist a mile long. People were putting money down, waiting 8 to 12 months for their vehicles. When it finally arrived, they were so committed they didn't even price shop. They just took it, paying whatever the dealer charged. But as supply normalized in late 2023 and early 2024, those same vehicles suddenly had massive inventory. The Grand Cherokee L, which was supposed to be exclusive and desirable, became common. And worse, some reliability concerns started popping up about the new generation. Nothing catastrophic, just enough to spook buyers. Now you've got 2023 Grand Cherokee Ls that hit the road 6 months ago, sitting at auctions with repos and fleet returns stacking up. Dealers can't move them. Prices are getting slashed. Banks are taking losses. It's the waitlist premium evaporating in real time. The 2022 Lincoln Navigator entered the used market as an ultra-luxury gamble that didn't pay off. This is the $100,000+ vehicle. This is the car that says you've really made it. Except the people buying them during the pandemic shortage were often making big money in jobs that turned out to be temporary, or commission-based, or dependent on market conditions that shifted. Lincoln Motors, desperate to move inventory during the shortage, actually loosened up financing. They got aggressive with dealers. And dealers, seeing an opportunity to move these high-profit units, started saying yes to people who probably shouldn't have been buying a $100,000 vehicle on an 84-month note. When those people hit financial trouble, they couldn't absorb a $100,000 loss. They couldn't walk away. They had to let it go. A 2022 Lincoln Navigator, that originally went for $105,000 to $115,000 is now trading for $68,000 to $76,000 at auction. It's a catastrophe for everyone involved, and there's more Navigator repos coming. The 2021 to 2023 GMC Yukon Denali is the over-optioned disaster. If you've ever bought a GMC with a Denali package, you know what I mean. The option sheet is a rabbit hole. You start with the base Yukon at $58,000, and by the time you hit Denali trim with the tech package, the luxury package, the towing package, and the premium audio upgrade, you're at $78,000, $80,000, $82,000. People bought these, convinced themselves they were getting luxury value, and couldn't afford the payments. Now they're underwater, sitting at auctions. The Denali package that sounded so good on the finance menu doesn't mean anything on the used market. A 2022 Yukon Denali that cost $80,000 new is worth $58,000 to $62,000 wholesale. The margins are gone. The buyers are gone. The repos keep coming. The 2022 to 2024 Tesla Model Y changed something fundamental about electric vehicle depreciation. People bought Model Ys thinking EVs would hold value better than gas cars. Fewer moving parts, lower maintenance, government incentives. It all made sense on paper, but Tesla's own pricing decisions destroyed that narrative. Elon Musk dropped the price on a new 2024 Model Y by nearly $20,000 compared to what people paid 6 months earlier for 2022 and 2023 models. That's not a small adjustment. That's a tsunami. And suddenly, everyone who bought a Model Y in 2021, 2022, 2023 was sitting on a vehicle that had lost 30%, 40%, sometimes 50% of its value in just a few years. Electric vehicle technology is moving fast. The 2021 and 2022 models don't have the range of the newer ones. Charging network improvements happened faster than expected. Suddenly, the used Model Y wasn't the future anymore. It was yesterday's technology, and people started walking away. Banks started repossessing. Model Y repos are hitting auctions fast. 2021 to 2023 Model Ys that cost $55,000 to $65,000 are trading for $30,000 to $40,000. The loss is real. The depreciation is ruthless, and it's still happening. The 2023 Ford Expedition represents a different kind of repo surge. A lot of these came from commercial buyers and fleet operators who overextended, cab companies, corporate fleets, small contractors who bought them expecting work that didn't materialize. The Expedition was new and updated in 2023, with a sleeker design and better technology. Early adopters who rushed to buy them are now finding out that the new generation has some electrical gremlins and comfort compromises compared to the old model. Plus, people are realizing that the 2022 models are actually available now at lower prices. So the 2023 repos are hitting the market fast, and dealers are struggling to differentiate them from the better-priced, older inventory. A 2023 Expedition that sold for $72,000 to $82,000 is now seeing auction prices in the $52,000 to $58,000 range for a brand new vehicle. That's the depreciation curve on steroids. The 2022 Nissan Armada is the slow seller accumulation problem. Nissan marketed this as a full-size luxury SUV to compete with the Tahoe and Suburban. But the reality is that the Armada never had the brand loyalty or the reputation for reliability that Chevy and Ford brought. People bought them because they looked good. They had decent financing offers, and they were available. But when something goes wrong, or when payment shock hits, Armada owners start looking at what they could have bought instead. Resale value is weak. Trade-in value is weak. And now we have a pile of Armada repos accumulating at auctions. 2022 models are trading in the $38,000 to $44,000 range when they cost $62,000 to $70,000 new. That's brutal depreciation. Nissan dealers are struggling to clear them. Banks are taking massive losses, and there's not enough demand to absorb the inventory sitting on auction floors right now. The 2022 BMW X5 is the subprime luxury lending collapse in one vehicle. This is where the story gets really dark. BMW, desperate to compete in the luxury SUV market, got aggressive with their financing arms. Really aggressive. They started offering below-market rates to people with mediocre credit, people who had no business financing a $70,000 vehicle. But the numbers worked if you stretched them over 7 or 8 years, and people took that offer. They walked out of the dealership feeling successful. Then their financial situation shifted. The X5 is expensive to maintain. Repairs are brutal. Insurance is high. And suddenly, the payment that looked affordable 6 months ago felt impossible. Repos started happening faster than BMW expected. A 2022 BMW X5 that cost $72,000 to $85,000 new is trading for $48,000 to $55,000 at auction. That's a $30,000 loss. BMW dealers are seeing their used inventory devalue rapidly. The subprime luxury lending experiment is over, and the wreckage is piling up at auctions across the country. The 2023 Kia Telluride is the waitlist to oversupply story, compressed into one model year. The Telluride was the darling of the shortage era. People waited months, paid markups, fought for inventory. It was the 3-row SUV everyone wanted. Then Kia figured out how to supply them, and everyone who wanted one got one. Then oversupply happened. Now dealers are slashing prices on new Tellurides. The 2023 models from early in the model year are struggling to find buyers because the prices have dropped so much. Repos are starting to roll in. People who bought in early 2023 and paid full markup are now upside down. A 2023 Telluride that cost $48,000 to $58,000 is now trading $38,000 to $44,000. The premium is gone. The exclusivity is gone. The demand is gone. Auction floors are starting to see more Tellurides, and dealers are panicking because the brand new ones are selling cheaper. The 2021 to 2022 Toyota Tundra is a tricky case because it's a Toyota, and Toyotas are supposed to hold value. But here's what happened. Toyota released an all-new Tundra in 2022 with a completely redesigned frame, new transmission, new everything. That made the 2021 and early 2022 models suddenly look old, not from an age perspective, but from a technology perspective. People who bought 2021 Tundras at $55,000 to $65,000 were shocked to discover that a 2023 Tundra with new generation technology was available, sometimes at similar prices or lower due to financing incentives. The 2021 models hit repos and auctions in a volume that surprised everyone. 2021 Toyota Tundras are trading for $42,000 to $48,000 when they cost $58,000 to $68,000 new. Toyota's brand strength is holding up some of the used market value, but the repos are still happening. People who thought they were buying a forever truck got surprised by technology obsolescence. The 2023 Hyundai Palisade represents the deep discounting problem. Hyundai brought the Palisade to market as a mid-range 3-row SUV at an attractive price point. It worked. People bought them. But as supply improved and competition increased, Hyundai started offering deeper discounts and cash incentives on new models. That immediately tanked the used market. 2023 Palisades that were priced at $40,000 to $48,000 new are now trading for $32,000 to $38,000 at auction. But the people who bought them early and financed them at full sticker are still on the hook for loans that are way bigger than the current market value. Repos are accelerating, and Hyundai dealers are struggling because the supply of nearly new used Palisades is undercutting their ability to sell new ones at better financing terms. It's a vicious cycle, and the auction floors are starting to fill up with them. This is $2 billion in losses. This is not theoretical. This is not a prediction. This is what's happening right now. This is bankers looking at spreadsheets and seeing red. This is repo companies working overtime. This is families losing everything because they made a financial decision at the absolute peak of credit insanity. And here's what this means for regular people. If you're thinking about buying a car right now, you're living in a buyer's market. Whether you realize it or not, the prices people are asking, the prices they want, those are negotiable, seriously negotiable. Dealers have inventory. They have these repos. They have slow movers. They're motivated. Walk in there with knowledge. Walk in there knowing that a 2021 F-150 is worth $42,000 on the market, and don't let them quote you $48,000 with financing that stretches out to 7 years. You have leverage. Use it. If you're currently underwater on a vehicle, meaning you owe more than it's worth, you need to understand your options. First, check your loan value versus the current market. Sites like Black Book, Auto Trader, and even local used car listings will show you what your vehicle is worth. If you're $10,000 underwater, you might be able to absorb that loss by paying it off and moving on. If you're $20,000 underwater, that's different. That's the kind of loss that impacts your credit if you have to walk away. Talk to your lender about it. Some banks are working with people right now. Not all of them, but some. Don't wait until you miss a payment. That's when your options disappear. If you're looking to buy at auction yourself, you can access some of these repo vehicles through Copart and IAA. These are massive auction platforms where fleet repos, bank repos, and lease returns all flow through. You need an auction account. You need to understand that you're buying sight unseen usually, or with limited inspection time. But the prices are real. The savings are real. Just understand what you're getting into before you pull the trigger. For dealers listening, for anyone in the auto industry, this is your moment to recalibrate. The insanity is over. The days of 7-year loans to people with 620 credit scores are done. The days of selling people vehicles they can't actually afford are done. Because the blowback is here. It's in these auction floors. It's in the depreciation curves. It's in the customer who lost $15,000. Get back to business fundamentals. Sell cars people can afford. Work with people on honest numbers. Because this market is going to force you to anyway. The $2 billion loss is just the beginning. The repos are still coming.